What's going on, guys? We're going to do a little technical analysis on SPY, which is the S&P 500. So pretty much today, starting off in the pre-market, we started to kind of trickle our way down, a little bit of aggressive selling to kind of start the open, realistically for about the first 2 hours of the market open. Market got a little bit choppy, started to chop around sideways, and then looked like it wanted to come off that bottom. It did make a nice little push here right around that 9:30 a.m. Pacific Standard Time. You can see once we got back over the 20-day moving average here, we were able to kind of push from a price of around 411 all the way up to a high price of around 413. But it is at this point where we still are trapped under a level of supply here. If you kind of notice, like, so if you draw your own supply and demand lines, you're going to take multiple touch points at the high wicks here, 1, 2, 3, and then you'd kind of draw a little supply zone here. So if you kind of take the lows and you put a little demand zone here and you notice that the price is very, very choppy, you can tell yourself, okay, again, now everyone trades a little bit differently, but you can tell yourself, well, if we hold these lows of 409.50 and we do make a push higher and we get back over the 9 or back over the 20, we can take a play to the long side. You would be necessarily not be wrong. However, you would just need to understand that if you are going to take a play like this, that you do need to be very, very cautious because the trend is down. So you are going against trend. The whole idea here is to just kind of get in, get green, and get out. Now, that's a lot easier said than done once you're in a trade, but you would use a tight stop loss. If we reclaim the 20-day moving average and we lose the 20-day moving average, just kind of cut your losses there and go about your business. And obviously the 409.50 area is going to be a potential scalp into the next demand zone at around 407. So you would get in here, you would be looking for $1, looking for 50 cents, looking for $2 max. You're going to treat it as a scalp. You want to get in, you want to size appropriately to your overall account size, and then as soon as you get green in the profits, 10, 15, 20%, you're going to want to sell out of that position. That's the way you're going to kind of have to manage your positions when you're trading against trend. Okay, now as we kind of go later in the day, we lose the 20 SMA, we kind of push down, we reclaim it, we kind of chop around, and now we kind of got this selling, and here we are chopping around. Your big macro levels, if you kind of look at this, selling started in the pre-market, okay? First 2 hours, yes, we did drift lower. We tried to make a recovery bounce. We drifted lower. But if you kind of look at what we're doing here, we're stuck in a range between 409 and around 415. This is a 5-point range, okay? You need to be able to identify this range and understand the 414 is the top of the range. This is a breakout. We do have room to 416. Over 416 is a macro break. Okay, 409 is our level of support. If we break 409, we have room to 407. Everything else in between, you're kind of riding the waves. So as we get down into this area, you're going to ride the wave back up. As we approach the middle to upper range, you want to get out of those long positions and reposition yourself to come back to the downside. So you're trying to take plays at the bottom and at the top. Everything else in between is where you want to clean your position. So if you enter long here, you want to clean your position in the middle of the range. If we break to the top of the range, you want to get ready to start playing back down to the middle of the range. And when we come down to the bottom of the range, you want to be taking those profits and waiting for either A, the flush, or positioning yourself getting ready for the bounce to the middle of the range. So in between each range, you got about 2 points from the top to the middle and about 2 points from the bottom to the middle. That's kind of how you play ranges in a choppier day. Overall momentum is down. So your bigger and better trades, your more aggressive trades will always be in the direction of the trend. So if the trend is down, your bigger trades are going to come and your faster trades are going to come to the downside. Your more slow working grinders are going to be the bounces back to the middle of the range. But until the S&P gets over 414 and realistically over 416, market's going to continue to go sideways. Until the S&P gives up 409 and works its way down to 407 and gives up 407, it's going to be very, very choppy. Just kind of keep that in mind. I just kind of wanted to throw out my thoughts live as the price action is kind of developing, show you guys how intraday I'm kind of looking at these charts even though we are getting some setups above and below the 20-day moving average, we can see that our bigger runs are coming from when we're at the top of the range. This loss of the 20 is a big extended move, okay? When we're coming off the bottom of the range, our big extended moves are coming from the bottom, okay? But the moves that are presenting themselves right in the middle of the channel are the more choppy ones, okay? So just kind of identify that. If we're in the middle of a demand and supply zone, everything being traded that's presenting itself in the middle of the range is going to be very, very choppy. Anything that presents itself at the top of the range should get some more follow through. Anything that presents itself coming off the bottom of a range should be more profitable. I hope that kind of makes sense. But again, on a day like today, you don't really want to be sitting back taking each and every single trade. You kind of want to get in, make some money, and just kind of close the books for the day, enjoy your weekend, because these are the type of days where a trader can really get overextended. You can really start over trading. You can really start forcing trades or believing that something is setting up when it's really not, just due to the fact that after the first 2 hours of the market open, the market essentially has just been chopping up and down like a wave going sideways. It's not really going anywhere. It's just kind of going up a little bit, down a little bit, down a little bit, up a little bit. Hope that makes sense. If you guys want to trade with me each and every single day live, make sure to join that Discord down in the description box below. If you guys are interested in my trading strategies for scalping and day trading options, visit evolutiontraders.com, and I'll see you guys on the next video.